Welcome to this week's episode of the Business of Real Estate Podcast with Lynn, Hoffmann, and Eric Johnson. Today, we are talking with Kelly from Mission 35, talking all about how to get those renters into becoming buyers and getting those people that are on the sidelines into the market and all of that. On our brand new season, second episode of the brand new season, and our new setup. Welcome, everybody, to the Business of Real Estate Podcast. Hey, Lynn. Good morning.
Good morning. How are you?
Good.
Good. Nice to meet you, Kelly.
Good morning.
Nice to have you here.
Yeah. And Kelly, you've been with Mission 35 for how long now?
About a year and a half, actually.
Year and a half, and you've been in the mortgage industry for
I'm going to say about 20 years. Been in banking for quite some time. So,
Yes. So, and it's important to know that because you're coming with a lot of experience in helping people get into homeownership. I think one of the things we've seen, we're talking the middle of 2025, depends on when you're watching this. But in 2025, we have some things going on, talk about tariffs, et cetera, from the U.S. It has really set the market off a little bit. There's some people that are a little bit, hesitant to jump in. But we also have some people that are renting and think, man, is this the right time? Everybody always asks, is this the right time?
It's always the right time.
It's always the right time if the cash flow is there.
Right.
Right? And it's important, I think, for agents, and I want all the agents out there to understand that the mortgage professionals are there to be your support and to team up, your partner. And that's really, you and I have talked about this a few times already. It is about a partnership, right?
Absolutely. Yes. Yeah.
So what's one of the biggest things you see in terms of like when we mention turning renters into buyers? What's the biggest thing?
I think the biggest thing right now is all the negativity that's out there in the news. And I think a lot of first-time buyers, young people, they're discouraged. And while it is, a little bit more difficult these days, it's definitely not impossible. So I think it's really important to get those people in front of the right people like myself and real estate agents that can help guide them and give them some good advice and show them, even if maybe today's not the right time, how can we get you there? Because it is possible for sure.
Yeah, I think first rule is turn the media off.
Yes.
And start talking to smart people. My experience with Mission 35 has been excellent. I have reps in my offices as well. They not only help people get educated, they also save deals all the time because of how smart they are and knowing what to do. So very important we're going to listen to what you have to say today. But I think that very much so, you've got to stop them listening to the media. That's absolutely critical.
100%.
And start collaborating with people such as yourself. And how do you prepare, and what do you do if you were to meet a new couple, first-time home buyers, they're saving up? What kind of guidance do you give them in order to save up to get ready to be able to? What bar do you give them?
Yeah, so every situation is a unique one. So I start, of course, by getting to know my clients and what their goals are. Obviously, it's their first time buying, but what does that look like? Are they looking to buy something that they want to flip? Are they looking to buy something they want to stay in? And then looking at their financial situation. So I do find a lot of the times, they don't quite have enough saved. So we look at different budgeting options. Maybe an RSP loan is something. It's really about being creative and digging deep into their situation and understanding how we can make it work. And maybe it's a gift from a parent, maybe, there's lots of different avenues, and it's about exploring all that and seeing what they're comfortable with.
Right. And I think something I want to point out, and you can expand on this, is Mission 35 is not just an A lender mortgage brokerage. They deal with all sorts of different products.
Absolutely.
So if you want to expand on that, how you can help the person that's not got the perfect credit.
Right, yeah. Well, we have access to over 70 lenders, so
That's
there's,
good.
I always say there's something for everybody.
Right, that's good.
No is not in my vocabulary. It might be, down the road someday, but we'll make it happen. But yeah, we do have lots of different lenders. If you're self-employed, there's different lenders we have for that, they're more lenient with bank statements and whatever the case may be. lower credit, we have lenders that are okay with that as well. And I do like to educate my clients on that. Sometimes people, oh, my credit's so terrible. And then I say, okay, well, what is it? And they give me a number and I'm like, well, that's actually not that bad. We can work with that.
Yeah.
But showing them how to increase their score.
Right.
I had a client,
Yeah.
a lower score, very low 600s, but it was due to high balances. Never missed a payment, really good length of credit history, but she had 3 cards and they were all near the max. So
that's the gross debt servicing.
Yes,
And you
yeah.
teach people how
yeah,
to work
let's
on
start
that.
knocking those down
Okay.
and you watch that score. That's an easy fix. Like that
Yeah.
score is going to go up quite quickly. So, if they've got their down payment, they just need to increase those scores a little bit. So we've put a plan in place, and it's about staying in touch too, making sure every few months I'm checking in to make sure they are paying it down and getting to where they need to be.
Typically, how long does that take for that score to really come up? So if I start knocking down those balances, are we talking a year?
Not even if it's balances.
Yeah.
If you're at your limit and you were to pay it off today, when they rerun that credit, you're going to see a drastic increase.
Yeah,
Like
and
I
that's what
said,
I was thinking, because I'm thinking for, if you're an agent out there and you have a client that is not, they can't get in today, then it's possible that with a little bit of help, again, make the mortgage professional your partner.
Yes.
Okay, become that partner. And then what they can do is by working with you, you can help them get that score up to all of a sudden, man, now they can get that house, right?
yeah.
And I think you had mentioned when you were answering one of Lynn's questions, you mentioned about there's different ways to get this done. So one way might be it's just simply getting the credit score up.
Right.
Right. Let's talk about the ability for somebody to bring in, say, a rental. Because last week we were talking with Rachel Stemsky, who does a lot of long and short-term rentals. And, we were talking about people investing, and usually it's all tenants coming in, but the homeowner could come in, whether they take a bottom floor and rent out the top or vice versa, depending on how much money they need.
Right, yeah.
That is a possibility.
For sure. Yeah.
So when it comes to a client wanting to move in and rent, so what's the difference in terms of mortgage qualification, et cetera? If I have a lease, like what gets counted, et cetera? How does that
Depends
work?
on lender, but we have lenders that will use up to 95% of the rental
the
income.
rental, yeah.
Yeah.
Okay.
So that's huge.
Yeah.
Oh, yeah.
If you're purchasing something, say for $550, your mortgage payment is going to be around, with property taxes, around $3,000. I'll estimate. If you rent out the basement for $1,500, you just cut your payment in half, right? And
Yeah.
it'll help you qualify as well because you have that extra income coming in.
Got the extra income.
Now,
Yeah.
do you have to have that person signed to a lease?
No, no.
Okay.
We use market rents.
Okay.
Most lenders will use market rent. So
Yeah.
no,
Okay.
you don't have to have that person in place.
Yeah.
At the time you buy, we look to see what
What the
you could
market
get
rent
for.
is
Yeah,
if you put it for rent.
exactly. Yeah.
But what if they didn't get a renter? Because we've based it, the
Yeah.
lender has based it on there being rent.
Doesn't
So
matter.
I'm just curious, from a real estate agent, they're talking to their client, they want to make sure the deal closes. Is it closing if they don't have a renter in place?
It still will close.
close,
So that's
yeah.
a risk that the lender will take.
Yeah.
I find a lot of the real estate agents are very motivated to get that renter in there, of course. I've worked with many in the past where, they're going to make sure that the client has somebody renting.
Yeah.
And I go through that with my clients too, to say,
Yeah.
it might take you a few months, so are you good to pay that $3,000 and not the $1,500 for, of course we look at that, but
Yeah. One of the things I just want to go back to a little bit is lending institutions look at what percentage of your line of credit is utilized.
Right.
So for example, if you have 2 cards that are worth 10 grand a piece, they expect you could go up to the max on both of them at any time. So
Right.
you have to watch out for that.
yeah.
But getting them paid down to whatever level is acceptable, maybe 50%,
Mm-hmm.
that will make a big difference to that gross debt servicing quite quickly.
Yeah.
The other thing I would like to caution people on, because they forget, is don't go and buy a new car while you're in the process.
Or change jobs.
Or change jobs, or any of those big things
Yeah.
that's going to pull on your credit.
Right.
That's really important. People forget that. So I think that this is extremely important that you have somebody like Kelly and you work with a professional, to guide you through the process so you know in 1 or 2, 3 months what you're going to be at and where you're going to go and what you can build. I want to ask you one question, though. How do you talk to people who have got paid off mortgages, so they've got a lot of equity? How do you help that client decide what they want to buy, if they want to take that money and do what with it?
That's a good question. I would say, well, it depends on their life stage and what they're doing. Are they wanting to sell that house to buy something else?
No, they don't want to sell it. They just want to take the equity they've got in it and maybe purchase something while the prices are really cheap. There's a sale on in condos right now, if nobody noticed that, at least in our area. They want to go purchase something, and then perhaps they would like to give that to a child or a grandchild or something like that.
Yeah, I do see that often now. Their parents are buying properties for their kids and renting them to them.
Yeah.
Or using the equity to help them with down payment.
Yeah.
Yeah, definitely. I mean, it all depends what they're...
You're seeing some of that now, though?
Me personally, not as much. I'm really in the first-time home buyer market, I would say.
Okay.
So the majority of my clients are first-time buyers.
Right.
Yeah, that's kind of where my time is right now.
Okay.
Yeah, and I think it's more, that brings up a point for me. What triggered in my head was the idea of everybody talking about rates. And Lynn has often said, turn off the media.
Yeah.
Stop listening, guys,
Yeah.
to the media. Not to us, to the media.
No, don't listen to us and Kelly.
Yeah.
Don't listen to me.
But the idea is that it's not all about rates. And to me, I've always said it's about cash flow.
Yes.
I think like Lynn, what I picked up from Lynn was when people have that equity, they have cash flow.
Right.
And when we're like currently the day that we are filming this, there are quite a few listings out there, but there's a lot of potential to negotiate pricing. The buy side is still a little on the slow side, but this gives people a lot of room to negotiate, get conditions in there, et cetera. But it is about the cash flow. And if they can afford that payment, they can make it happen. But, we're talking about people that, and I think maybe is it a cash flow conversation agents have to have? Like when we talk about bringing renters into buyers or that first-time home buyer who's hesitating, because there's a lot of agents I talk to, and I'm sure you're getting the same, is that they have all these potential clients sitting on the sidelines.
Yeah.
So what are, other than, a couple of things we've talked about, what are some other things we can, or the agents can have conversations about to help get them off the sidelines?
I think it's, again, shutting off the media, of course, but also showing them, breaking it down what their payments are going to be.
Yeah.
What are you paying in rent right now? This is what your mortgage payment's going to be. Like, a lot of times it's less. Or it might be the same, but now you're building equity. Like there's...
I'm gonna give you a little saying, live in the payment, not in the mortgage.
Right,
Yeah.
yeah.
You live in the payment.
Yeah.
So what can you pay
Yes.
a month?
Yeah.
And then let's work with
the first thing I ask my clients is what can you afford? What are you comfortable
Right.
with? I might be able to approve you for a $700,000 purchase. But if you're paying $1,500 in rent right now, you probably, that's going to be a shock, right? So I kind of go through that with them.
Yeah.
So they feel comfortable.
Yeah.
Because now you have bills to pay, you have property taxes, you have your mortgage. So
Oh, there's
it's,
a cost to homeownership
what are you
for sure.
comfortable with?
And I think, and I've seen,
Yeah.
I've worked with agents that put spreadsheets together.
Yeah.
And will show the first 5 years, and what they'll do is we can expect, say, a couple % increase in property taxes, blah, blah, blah,
Yeah.
utilities, and so they'll show 5 years out
Right.
to say, here's what your monthly costs are gonna be.
Yeah.
If you did not get a raise or you did not get a promotion, can you still live off of this?
Right. Yeah.
Right.
But you've got forced savings along the way. The minute you change from a renter into
Yeah.
into a homeowner,
Yeah.
you've got forced savings, and the equity is tremendous. Now,
Yeah.
you go through a couple of years where the equity maybe doesn't raise that much,
Right.
but God, later on, they're not
Yeah.
making any more land, so the equity
Yeah.
does.
And showing them
does
the
go.
balance at the end of that
Yeah.
5 years. Now this is what you've got
This
in your
is what
home.
you've got in
Right.
equity, and you
Yeah.
can go do something else with it. Maybe keep the property that you're in now, and then buy a new home, and then rent the
Yeah.
one that you're in.
But
after
even
that.
but we're talking, if you're
Yeah.
talking about somebody who doesn't even own right now,
Yeah.
I mean, there is a bit
Yeah.
of also a sticker shock in the sense that, you go from renting to owning, there's property management, there's other
There's
stuff.
other
Like
stuff.
you got to go
There's
buy
other
the
costs.
lawnmower,
Yeah.
you got some yard work.
Yeah.
Unless you're buying a condo
Yeah.
where you don't have to do anything, but then you have
But then
condo
condo
fees,
fees.
Right.
on top of
Yeah.
a mortgage. So again, to me, it comes down to cash flow.
Absolutely.
But anything else that an agent can do or a conversation they can have that would help move that first-time home buyer, that renter into home ownership that you can think of?
Not specifically, just like the education piece, like really reiterating that it's, you can't wait for the rates to go down. I mean, the rates did come down and then they went back up. So,
But also
So
what happened to
that's-
prices though, right? When the-
Prices have gone down.
Right,
And
No,
yeah.
but when the rates went down,
Yeah.
typically the
price
prices
goes
went up.
right.
Yes.
Yeah.
And so again, you look at your monthly
Yeah.
payment.
yes, exactly.
Right.
Yeah.
And I think for an agent, what I would encourage you, if you're an agent watching this or listening, is take a look at a property that sold, say, so many months ago, and then take a look at, comparable property today. Like if the rates are different, and compare and see how much of a change it made.
Yeah.
Because I know a lot of times we've shown that you were better off buying
Yeah.
when the rates were a little bit higher.
Right. Yeah.
Because as soon as they went down a bit, prices went up,
Changes,
but your
yeah.
monthly payment grew,
So thank you for setting that up.
Well, you're welcome. I'm a setup, man. You're the closer, Lynn. Come on.
Today, if I was coming to you, would you be encouraging me for a variable or a fixed?
I don't encourage anything until I speak with my clients and find out.
Good point.
I always ask, what is your comfort level?
Yeah,
Like,
okay.
are you? I mean, variable is very attractive right now, but not if they're going to be calling me every month to find out what's going on, right? There has to be a comfort level there. So that's kind of how I position that and see what their long-term goals are. Like, why do you want a variable? Why are you even thinking of that? Is it just because of the low rate? Because it's not always going to be low, maybe. Or maybe it will, maybe it won't.
It's so funny because personally, I'm always a variable person, always. I think in the long term, it usually works out, but there's that
Yeah.
stability and that certainty
Yeah.
with the other one, especially when they were going up a few years ago. I did
Yeah.
jump off and stop for a minute. Now I'm back on the variable bandwagon
Yeah.
again. But
Yeah.
that's a good point. If they're up for that, if they can handle that, if they
Absolutely.
have good advice and people also think that when they get a mortgage, they're locked into it sort of forever. They can port them.
Yeah,
They
yeah.
can blend them. There's
Absolutely, yeah.
a bunch of different things they can do.
For
So
sure.
that's all, I guess, part of your education process.
Yeah, definitely. Yeah, showing them the different costs, like what the payments are going to be,
Right.
what's going to happen if it goes up, what's going to happen if it comes down. Just kind of showing them everything to say, now you have to make an informed decision and be
And then
comfortable with.
they can always change the amortization period
Yeah,
too.
yeah.
So,
Yeah.
maybe, what's the
Extend-
highest amount right now? 35 years? Or
You
30?
can go up to 35, but 30 for like a first-time buyer purchase.
Okay.
Yeah, yeah. But there are
But you get
lenders
some
that.
paid off on that, you can drop it down later.
Right.
You can
Yeah,
pay more.
absolutely. Yeah.
Okay.
Yeah, it brings something up, and I know this, we were talking about how do we get people off the sidelines, but it does bring up a point that right now we do have, what is it, something like 85% of mortgages are coming up for renewal
Yes.
between this year and next. We had back in 2022, February, March, that was the peak. Like
Yeah.
we saw some high prices, and if you were selling, that's when you wanted to
Yeah.
sell. But if you were buying, oh my God, like you lost $200,000 to $300,000 in value in the same year because prices plummeted.
Right.
And those people coming up for renewal, because you had people that came in at 2%.
Or less.
Right, or less than 2% back then,
Yeah.
because that's why they were paying crazy prices because they could afford it. But now all of a sudden we're up around 4, right? They see their mortgage payments doubling.
Yeah.
What are some options? So for an agent that's talking to a client, because we see this a lot, people they're trying to get their money back, but they're not.
Right, yeah.
They're trying to get as high a price, but because they feel they have to sell. But are there some other options? What are some of
Absolutely.
the lenders doing? So what are some of the options they have?
I think the not easiest, but the most common one is to extend the amortization. We need to extend that back out to 30 or 35 if we have
Yeah.
to.
And how much of a difference does that make? So let's say I have
think of it.
$500,000 mortgage, 20-year to a 30-year, tipping, 3,000, let's say $3,000 a month payment.
Yeah.
You mentioned 3,500.
Yeah. I'd say about $500 a
Okay.
month. Yeah. That would be my estimate. And then it's looking to see, like, do they have other debts? Have they accumulated? Likely they have. I have some clients that, because of everything that's going on and the price increase, they've now racked up credit card debt.
Yes.
And so rolling that into the mortgage too, to increase that cash flow
Yeah.
makes it a bit easier that they can put it back on the mortgage
Well,
too,
they're
right?
spending 19 to 20%
Exactly,
on the
yeah.
credit cards. If they get rid of that
Right.
and roll it,
Yeah.
it's a saving. It
Yeah.
is a saving.
And the
I think-
minimum payments are huge on those cards, and
Right.
you're not
Yeah.
getting
You're
anywhere.
not
So
getting anywhere.
by putting
Yeah.
that money back in the pocket, it kind of alleviates the mortgage payment too, right?
Yeah.
Okay.
I think
Yeah.
so. I mean, there's so many ways that people in your position can help new
Yeah.
people and can help our agents as well. And that's why we partner with
Yeah.
Mission 35
Yeah.
is to help our agents learn and become more knowledgeable.
Right.
Do you do any events with some of the agents in the, I guess Kelly's more out of the Niagara area
Yep.
per
Yeah,
se?
St. Catharines, yeah.
Do you do events? If any of our agents asked you to help participate in
well,
educational
Like
we're-
open
events?
houses.
Yeah, open houses for sure. I
good.
have my feature sheets that I bring and
Yeah.
little treats and bags. And
Yeah, because the first thing a person says when they walk through the door is, "Gee, can I afford this house?"
Yeah,
their brain
yeah.
starts going, "How can I afford it? What can I
Right,
do?"
yeah.
I think this is where it's really important to have partnerships with yourself and your company. That is very important
think-
for agents.
Every open house should have a mortgage agent with the real estate agent. And I know it doesn't happen all the time, but I really think
Yeah, I
that
think it's a good
that's
idea.
super important.
Yeah.
I come with my laptop, so,
Yeah.
if anybody has questions or I've never done a pre-approval on the spot. Nobody's ever asked for that, but I could. My computer's there and I can run
Yeah.
the numbers, but we have our feature sheets that show
Yeah.
what the cost is going to be for the month, and just having that extra person with you, like that
Absolutely.
expert, right, that can
Absolutely.
answer the mortgage questions.
I think to your point,
Yeah.
when you talk about fixed versus variable,
Variable,
is seeing the numbers there.
Yeah.
Yeah.
It's to me, I've always said to agents, it's somebody looks at it and says, man, this is 800,000, like depending on where you are, but
Right.
whether it's a $500,000 home or a $1.3 million
Mm-hmm.
home, man, that's a lot. And you start looking at, can we afford this? But when
Mm.
you actually see the numbers
Mm-hmm.
broken down, the different amortizations, fixed, variable,
Yeah.
and okay, now it makes it a lot more.
And frequency of payment too.
Right.
I mean,
Yeah.
a lot of times people pay once a month. That's going to cost them more than they pay once a week.
Absolutely, yeah.
So
yeah.
there's all these little
Showing
things
them
that,
weekly and, yeah.
yeah.
exactly that people can hone into, or they pay a lump sum. That's a little bit harder. I think people don't tend to save for that. They go do
Yeah.
something else, buy that car. But if they start on that weekly one where it's the accelerated weekly, it really does help.
Right, absolutely,
It
for
does
sure.
make a difference
Yeah.
to people's mortgages. So, question for you. Not a happy note question, but how many power of sales are you seeing these days, Mission 35? Are you seeing any?
I've seen a couple of estate sales in the last
Yeah.
couple months, but I
no
personally
power of
haven't seen
sales.
power of sale out where I am.
Good.
Yeah.
I haven't
which-
seen that many either,
Yeah.
and the reason I'm asking is because there is a bit of a media talking point that
Yeah.
there's all these things happening, and I don't think it's necessarily true.
No.
If
no.
you drill it down, I think then the percentage is very, very, very
Yeah,
tiny.
yeah. I haven't.
Yeah, the number of people missing mortgage payments, there are some happening, but it's still a
It's
very
very
low
few.
percentage.
Yeah, and
right?
I think
Like
it's
single
actually
digit.
Yeah,
Yes.
yeah, and less than it was pre-COVID.
Oh, yeah.
I think. Yeah, that's
Yeah,
what
so,
I read the other day.
but
yeah.
again, that's something that, the media pounds the drum on.
Yeah.
And I don't think it's necessarily accurate. So
No.
I think those are places where you can talk to someone like Kelly and find out what the reality is of what's
Right,
going on. And the other thing is right now too, is if somebody's selling their home and they bought it in 2021, they may be taking less on that. But when they go to buy,
Yeah.
there's a sale going on that side.
Right.
Yeah.
Yeah.
Right?
So it's relevant.
So it's all
Everything's relevant.
relative and
Yeah.
to
Yeah.
to your position, right? So you have to think of it. People will, I get agents that say, oh, they have to get this amount of money. No, it doesn't kind of work that way.
Yeah.
It doesn't work that way.
You're buying and selling in the same market. And so if you do have clients out there that are, they bought up here and they're going, man, I'm selling and I'm losing money, but you're also buying
Down here.
down here.
Yeah.
So you're buying and selling in the same market. So if you're gonna get $200,000 less, but you're also buying something that, back then would have been $200,000 more, so it's
Exactly, yeah.
still relevant.
Yeah.
But I think the key here is you got to partner with your mortgage specialist, have them there with your open house. I mean, it truly I know a number of agents that do it. They love it. I know you guys,
Yeah.
mortgage specialists love it.
I love it.
Yeah. Well, I get you in front of people. I
Yeah.
think you guys are on the same side.
Yeah.
And I'm hoping that agents out there realize that you're there working with them.
Yeah.
And we had a couple of agents, another member of Mission 35 was on a much earlier episode. We were talking about the whole idea of that partnership. You're working together, and if you get into one of these situations where, hey, we've got to make a decision in the next hour, 2 hours, right?
Yeah.
What can we do? Like, they can call you up and say, hey, Kelly, like, do we have room for more deposit? Or if we do this with the deposit,
Yeah.
how does that affect this? Or if, if we
Absolutely,
want to
yeah.
go up in price, what difference is that going to make?
Yeah.
Like, the client can make a decision then because they have you on speed dial and vice versa,
Absolutely,
right?
yeah. Yeah. Yeah.
That's very important. The partnership is very important.
Yeah.
And as I
Huge.
said, Mission 35 and some of your other colleagues that are in Mission 35, they've done an amazing job of pulling out of the fire deals
Yeah.
that 2 days before closing were not going to close.
Right.
Because other mortgage companies had not done their due diligence.
Yeah.
And people were getting left at the end.
Yeah.
That doesn't happen with Mission 35.
Yeah.
You have a
We're
great
onto it.
record
Yeah.
on closings.
Yeah.
Yeah.
Because it truly is a team effort.
Yeah, it is.
We have to work closely
Yeah.
together and help each other.
And that's
Yeah.
what I really would like people to understand today. Whoever your partner is, you need a strong partner to get you through these questions.
For sure.
Yeah, and as much as we have that partnership, please, I mean, Kelly works with agents from all the different brokerages, so this is not a Remix only thing. Just want you guys to know that, because we encourage that. Because we want to help our partners grow and expand their business, not just with us, but with every agent. But I think that the biggest thing right now, getting back to, is getting people off the sidelines.
Yeah.
And I think it's just important that agents understand the different scenarios and that they can work with you on that.
Right, yeah,
Right?
yeah.
Come up with different solutions so that they can get these people off.
Yeah.
And I think, it is education. I know you talk about that.
It's all about it.
Conrad talks
Yeah.
about it. I
It's all
talk
about
about it.
education and who you partner with.
Yep.
It's all about
100%, yeah.
education and who you
that's,
partner with,
I
so.
think the biggest thing with the realtors when they have renters, they need to send them to a mortgage
They do.
specialist
Yeah.
right away. Doesn't matter what they say. They say, "Oh, I can't afford to buy," or "My credit's bad." Doesn't matter.
But there's
Send them
that
anyway.
education that they can get to that spot quicker if they have the
Exactly.
proper
Yeah.
guidance and they understand how the system works.
Because a lot of times they think they can't, but they can.
Yeah.
Right?
Yeah.
So, don't assume.
Yeah.
Talk to the professional.
Talk to your
find out.
professional.
Just sort of a last, we're getting close to our time here, but I asked you this the other day in the office, but rent to own. There was a few years back where there was, you saw quite a bit of that. I don't
Right.
see that much anymore.
No.
I think there's maybe only one or two people left that
Yeah.
even do that. Is that really a solid plan?
I personally don't think so. I think it's better to work through whatever the issues are, whether it's saving up for that down
Yes.
payment or increasing your credit or whatnot, and getting into your own home.
There's too many variables in it.
Yeah,
Too many unknowns.
I
yeah.
agree. Yeah, yeah,
Yeah, it's a lot more complicated than it sounds. It
It
sounds
is.
like a great idea, but
yeah.
no.
Yeah.
It's
and-
not just rent to own.
No, it's not.
And I think there's a reason why you don't see as many anymore.
Yeah.
Because they
Is
tried
that-
it and it didn't work well.
It wasn't working well. So if you are thinking, oh, hey, maybe there's an option
Talk to
here.
Kelly.
No, I think going forgetting the rent to own, but owning and renting at the same time. And I think the biggest, and I've seen it in a family member, having that conversation about why don't you move to if things didn't go right, like they have somebody in the basement now, but it's like, why wouldn't you move to the basement right now at the top? Because you can make more
Right?
money.
Yeah. Yeah.
Right? But then there's this stigma. Sometimes people don't want to,
Yeah.
but it's still
Hey.
an option.
You do what you have to do.
Exactly.
And, it's an
And where are
option.
you living right now? You're
an
obviously
option.
renting
Right.
something where you're probably living in a basement or apartment or,
Yeah.
you know what I mean?
know?
Yeah.
Yeah. So,
So-
yeah,
Risk
I think
and
it's a really
reward.
good strategy for sure.
Yeah.
Yeah.
Okay.
Yeah.
So
Thank you.
I like to ask people, is there anything we didn't ask that you think people
I
should
think
know?
you asked a
agents
lot.
should
We're
know?
good.
Well, we try.
I'm kidding.
We try and think of everything, but
No, that's good. Yeah. Yeah. No,
No.
I think you nailed it. It's education and turn off the media. And
Yeah.
just try to stay positive. I mean, it
Yeah.
can happen. It is possible.
Creativity.
Sure.
I like
Yeah.
what you said. You don't like the word no. No just means try harder.
Yeah, yeah.
That's all it means.
Absolutely.
You just got to
yeah.
keep going
and
at
be
it.
creative.
Be creative,
I'm
yes.
a problem solver.
Yes.
I love getting into the nitty gritty and
Yep.
figuring it out.
Figure it out.
And that's how we have to be in this in this job for sure. But I enjoy it, and
Yeah.
it's definitely
terrific.
about being creative.
well, thanks for joining
Thank
us
you.
today,
Thanks
Kelly.
for having
Appreciate
me.
it.
Thank you.
Thank you, all of you out there watching and listening to us. We appreciate you being with us today, as with our special guest, Kelly Sauriol from Mission 35. And we hope that, as usual, please like, subscribe, follow us on all the different channels. We appreciate all of you. And we look forward to seeing you next week on the Business of Real Estate podcast. Lynn Hoffmann and Eric Johnson.